Welcome to ForexTV.com. Today's Tuesday, April 7th. I'm Tim Kelly with the New York Forex Market Buzz. U.S. equity markets are weaker at midday, near session lows, down over 1.5%. Crude oil is trading below $50 a barrel, down about 2%. Gold is making gains, almost $10 an ounce. The dollar is up against the euro and the British pound and weaker against the yen. Have a quick look at the headlines. The IBD, Investors Business Daily, TIPP, Economic Optimism Index continues to improve. Economic sentiment in the United States rose further in April, according to a report from Investors Business Daily and Technometrica Market Intelligence. The IBD TIPP Index of Economic Optimism rose to 49.1 from 45.3 reading in March. Economists had expected a reading of 46.5. The Economic Outlook Index increased to 50.2 compared to the previous month's reading of 40.2, while the Personal Outlook Index rebounded to 52.7 from 51.1. The Federal Policies Index dropped back to 44.5 from 44.7. U.S. weekly retail sales continue to move higher. U.S. retailers saw an ongoing rise in weekly chain store sales for the week ending April 4th, that according to a survey from ICSC that showed more spending compared to the previous week. U.S. chain store sales declined an annualized 0.2% in the week ending April 4th, the same as the previous week. On a week-over-week basis, meanwhile, sales increased 0.6% following a 1.1% gain previously. Also released was the Johnson Red Book Retail Survey, which recorded an annualized rise of 0.4% and a 0.5% increase on a monthly basis. Well, American CEOs are downbeat on the economic outlook, contrary to the IBD TIPP Index. The Business Roundtable CEO Economic Outlook Index fell to a reading of -5 in the first quarter of 2009, down from a reading of 16.5 in the fourth quarter of 2008. The report noted that the decline was not as nearly as steep as the 62.3-point fall from Q3 to Q4. The survey indicated 67% of CEOs expect their company to experience a decrease in sales over the next 6 months, while only 24% expect an increase. Meanwhile, 66% forecast a decline in capital spending, compared to just 9% who expect to spend more. More than 70% of those surveyed expect their company's employment to decline over the next 6 months, while only 7% expected job growth. According to Reuters, Georgios Provopoulos of the Bank of Greece retracted comments made in an interview with Bloomberg News on Tuesday. The news agency cited the central banker as saying that the ECB could cut interest rates below 1% if necessary. He was quoted as saying, "I do not see 1% as a threshold for the ECB benchmark rate," that according to Bloomberg News. In a phone interview, Provopoulos also told Bloomberg that the latest economic data suggests the economy is very weak, and the IMF and OECD are expecting a deeper recession in Europe than current projections from the ECB. Today we're joined by Greg Michalowski, VP of Trading and Liquidity at FXDD. Greg, welcome to the program.
Hey, thank you, Tim.
Greg, we saw some mixed data today, and the statements from the ECB didn't really help stabilize the situation there. And then overnight we had a rate cut from Australia. And the Reserve Bank of Australia of 0.25%. They were expected to hold pat. That hasn't done much for Aussie dollar, but a little bit of uncertainty in the markets. Why don't we start out with euro right now? Looking a bit toppish here. Why don't you give us your perspective on trading activity?
Yeah, Tim, your introduction outlines a lot of what's going on in the markets. There's a lot of global situations here that are more toward the bearish side, obviously, than any sort of a bullish side. And this is going to cause movements in some of the currency pairs up and down, depending upon what you're focusing on. The Pavlovian reaction seems to be that if the stock market goes down here in the United States, you get the euro to go down, the pound sterling to go down, maybe dollar Swiss to go down, and dollar yen, dollar Swiss go up, and dollar yen come down as people exit the risk trade. But looking at the euro specifically on a daily basis, back on March 18th, we broke above what I consider a key technical level. That's the 100-day moving average. That day we moved sharply higher, went up to the 137.37 area, and started to come down again, where we tested that moving average again. I sent you a chart. That's the blue line in the chart. And since that time, we moved back higher, but the high didn't approach the 137.37 area again, and we since started to come down. So you're right in saying that the euro looks a bit toppish. We have lower highs. There is key support at this 100-day moving average, which currently comes at the 131.33 level. I think if we're able to hold that level, then perhaps there's a chance to move higher. But it's looking more like a triangle formation here, and that it might give way to the downside here. So overall, I'm a little bit less positive on the euro. The comments from the ECB official, albeit from Greece, suggested that their rates could go down to below 1%, and he said in theory they could do some quantitative easing type thing. So all this should contribute to a weaker euro, and certainly the growth there in the eurozone is weak, and can you justify it? If you get a declining stock market, that will also probably lead to selling of the euro and a buying of the safe haven currency, which is the dollar. So that's my view on the euro at the moment.
Okay, so let's move to Craig. Let's move over to yen and the yen crosses. Why don't you give us your thoughts there?
All right, the yen has been an interesting trade over the last few days, because it is also trading very, there's fundamentals, but there's also trading very technically. One of the charts that I sent you here was the hourly chart, and again, I'd like to look at the 100-bar moving average. In this case, it's a 100-bar hourly. And way back when, in March 30th, we broke above this key level, the 100-hour moving average, then tested it, and we started to move up. It took 1, 2, 3, 4, 4 days of up movement, which brought us up to the 101.43 high. Now this level was a key only because we were approaching the 618% retracement of a move down from August 2008. That level comes in around the 101.60 level. So we got within about 20 pips of a 618 retracement of a move down from August 2008, mind you, to the low in January. So that's a significant technical level to bounce against and to stop the move higher yesterday. Since that time, if you look at this hourly chart, we've had lower highs. So like the euro, it's also showing a bit that it's a bit tired here at the top side. Today, however, we did come down and we tested the 100-hour moving average. That average comes in at 99.84. The low today was 99.86, and we bounced from there. But nevertheless, we're still making lower highs on the hourly chart, and the downside seems to be that we might see further correction in the dollar yen. We are going to have to get through that 100-hour moving average, however, in order to move to further levels on the downside. And there's also another key level in the dollar yen, and I sent you a daily chart of the dollar yen, and this is a 200-day moving average. That level currently comes in at 99.27. So we have two key levels support levels on the downside that, if broken, we could see more significant moves in the downside in the dollar yen. That's 99.84 and the 200-day moving average at 99.27. So those are my levels from a technical perspective. If we're able to take out some of the highs that we've seen, specifically at the 101.43, and get through that 61.8% retracement level, which again comes in around the 101.60 level, then the upside is preferred. So right now we're kind of in between support and resistance, waiting for the market to tell me which way to go.
Okay, and I would imagine that we could expect the crosses to follow suit there.
Right. The euro yen is an interesting. Well, they're all interesting to me, but today. But while the dollar yen was testing that 100-hour moving average, the euro yen was testing the 200-hour moving average, and we held that very nicely. Since that time, it went up and tested on the upside the 100-hour moving average. Again, I've sent you this chart there. We're sort of in between the two goalposts that I look at, the 100-hour moving average and the 200-hour moving average, suggesting the same type of analysis as I did in the dollar-yen. If we're able to break to the upside, then above the 100-hour moving average, then we should move higher. That level currently comes in at 133.84. If we're able to break through the 200-hour moving average on the downside, which comes in at 132.27, I think we move to the downside. So the charts are kind of giving me the clues right now, but coming off of the high levels, the bias remains to the downside, and unless these key technical levels are broken on either side.
Okay, so Greg, let's move over to some of the other risk trade. We mentioned before we came on the air Aussie. What's your take there? That is also trading a bit heavy today.
Yeah, the Aussie dollar. We're looking at an hourly chart here in the Aussie dollar, and like the first chart or the yen chart, if you look way over to the left, we broke above the 100-hour moving average and tested the level at the 69.13 level. That's the blue line in the chart, way to the left. That break led to the big move up to the 72.28 level, where since that time we corrected to 38.2%, and then moved up to a lower high, back down to the 38.2%, up to another lower high. So we're seeing lower highs, but we're seeing good support at the 38.2% retracement, which comes in at 70.53. We've had 3 tests of that level. I hate to be a broken record, but we are in between resistance, which we have now a double top on the last high, which comes in at 71.68, and the support level at that 38.2% retracement level, which comes in at 70.53. So as far as trading the currency pair, I'm waiting for the market to tell me which way to go on this. We had the good move to the upside, which if you caught that was a nice trade. But right now in a consolidative non-trend market, with the news out as far as the rate cut, we do have unemployment coming out tomorrow in Australia, which they are expecting to show continued weakness. I want to lean toward the downside, but I'll let the price action dictate if I'm going to go short or not at the moment.
Great. Well, I appreciate your insights. We'll leave it there for now, Greg. Thank you.
Hey, thanks for having me.
This has been your New York Forex Market Buzz with Greg Michalowski of FXDD. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.